Well, Indiamart, that's a stock under some pressure on the back of muted showing in the Q3 numbers. Sharp decline in margins. That's something that the street seems to be a little bit concerned about. To understand what's the outlook from here on, what's the rationale behind the recent investments, we have with us the CEO and the founder, Mr. Dinesh Agarwal. Hi, Mr. Agarwal. Good speaking to you as always, sir. Give us a couple of details. You have been guiding that those elevated margins were not sustainable. They've come down a little bit in the past quarter. The street is a little bit concerned. I think in the past you were guiding for around 38% in terms of margins. Do you stick to that guidance? Do you expect some pressure on margins from here on? Please go ahead.
Yeah, so one thing that has changed is now we are looking at growth and we are investing in number of people, headcount, as well as you see that there is change in salaries in the market. So we would be competing on the salaries. So there could be some pressure. But I think between 35 is what I will continue to guide.
35 and 38%, that's a near 700 basis points lower from where you are currently. 42% right now, 38% is what you had guided for earlier. So 35 or 38, could you give us a sense, or will it stay in that range?
So I think the Q4 has always been margin pressure because in the Q4 what happens, the expenses come immediately while the collections happen, so deferred revenue goes up. But the revenue from customers only flows through over the time. So Q4 there could be 35%, but then overall I think we will be stabilizing at 38%.
Okay, and you spoke about revenue from customers. Let's just talk about that. Your paying subscriber growth has come in at around 6,000. This is above what you had earlier targeted, around 5,000 odd. So is this 6,000 sustainable? And secondly, annual revenue per customer has also declined from closer to 50,000 to 48,000. Is that a price off that you're doing, or is that something that you're looking at, higher paying subscribers but lower revenue per subscriber?
No, the revenue per subscriber on a quarter-on-quarter basis, because the number of customers as they start to increase, as you see last 2 years, the number of customers have not increased much, and that's how you see the bloated revenue per customer. But as you go, we increase the customer because customers come at the bottom of the pyramid. And as they become aged, they increase their revenue per customer over a period of time.
Okay, so going ahead then, what should be the average revenue per customer? Should it be in this band, 48,000 odd?
Yes, more or less in this band. We don't see much of the pain coming on that.
And what about the additions? I mean, on a quarterly basis, you had guided for around 5,000. You have done around 6,000. You expect?
Yeah, we have done 5,800, and we will continue to do better than this.
Oh. That's good news. Before we get to the acquisition, I just want to ask you one query. A couple of months or so ago, there was a bit of a buzz that maybe Indiamart is going to go ahead and raise some equity. Is there any such plan? Is there a strategic investor coming in? Just clearing out the air.
No, I don't have any such news.
Good. Then let's talk about business. Just wanted to clear that for our viewers as well. You're investing close to around 500 crores for a company that's busy infotech. It did a revenues of around 42 crores in FY21. How do you scale this business up for a year? If you could give us a sense, vision for this acquired company.
Yeah. So if you see, their large base of their customers comes only from North India. I think there is a good opportunity available to expand the sales network beyond the North India. I think that is one good opportunity, and over the period of time, ARPU increases are also possible, as the current ARPU is very low from the accounting perspective, and it is a very robust accounting system, has been there for 25 years. We have almost 2 lakh plus customers there. So I guess those numbers will continue to increase. It will take some time because it's a new business that we have acquired, and we will understand the business over the next 2-3 quarters, and then I think we will be able to scale it big.
So could you give us a sense of how big it could scale to? 42 crores is the revenue that the company is already doing, and that's only from one geography. With your distribution platform, your customers, your cross-selling, upselling, what could this scale up to?
So learnings that we have from Vyapar as an accounting software company, they have grown double every year, and they continue to scale well, and we have also made another follow-on investment in Vyapar, and I think even accounting systems are going to be here for a long period of time. We believe that 30-40% growth rates are possible not maybe immediate year, but going forward.
And what about inquiries? Because that was the one worry, if you must, where we did see a 22% decline quarter on quarter, and this after having seen a 7% decline already. Is that on account of your algorithm change? What's the outlook here?
Yeah, so as I guided in the last con call also, that the daily business, unique business inquiries, the quarter 3, there are some festive holidays, and that's how it remains muted, and it has declined by 12%, I understand. But on the total business inquiries, we are making algorithmic changes now that we have more data and more knowledge about how to do a better matchmaking. So I think per unique business inquiry, I think the total business inquiries will be 5 odd going forward.
All right, final query then, Mr. Agarwal, before we let you go on, your 9-month collections are looking quite good. I'm looking at a sales note, and they expect that going by the collections, maybe in FY23 you can do a revenue growth of at least 20%. That's doable? You think that would be the rough one?
Yeah, that should be doable.
Good speaking to you, Mr. Agarwal. Thanks so much for stopping by and filling us in with all of those details. We look forward to having a chat with you at the end of the next quarter. Well, keep an eye out on the markets. We did do a big move actually. We're back down to around that 17,000 odd mark. Remember, intraday we did see a bounce from around that 16,836. But from those highs, again, we have seen some selling. And some of those stocks should come off you. Titan has moved to the low point of the day. So get the intraday chart out there. Wipro, it's not had a great start to 2022 at all. The stock, in fact, is one of the underperformers. It's down 22% in this year itself. And we're talking about only 25 days into the year. So Wipro continues to come in for some selling. Tata Steel and these ferrous names, they're very, very nervous. So they are, they try to bounce back, but from the day's high, Tata Steel has almost slipped into the red. Keep an eye out on that one as well. And Infosys, that's the other one.
One stock that's swimming into my can right now is Lux Industries. It's down 18% right now, and with huge volumes. Most of the cuts have come by in just quick succession right now. The stock's fallen below the 3,000 mark, and that's on account of some news reports with regards to some regulatory action taking place out there. We will monitor this story. We've written to the company as well. We'll try to get a word from the company as well, but just watch out for this stock. It's down 18% as we speak. With that, we're out of time on this edition of Chartbusters. You stay tuned to CNBC TV. 18 Trading Hour comes up next.